What the negative Nellies on stock market projections always get wrong. It's crazy to me, man. And I don't understand why they can't process this. But anyway, and look, by the way, I'm somewhat pessimistic on projections for stock returns too. When I run my right capital stuff for clients, I use 6% for stocks, 3% for bonds, and if you have a combination thereof, it'll be between 3 and 6%, depending on what your asset allocation is. And I still use the Vanguard models because John Bogle is the GOAT. And if the GOAT says this is how you forecast stock projections, who the hell am I to disagree? You know what I'm saying? The GOAT's the GOAT. Anyway, so Vanguard notoriously has been conservative for, decades now, going back to 2010. If you go to archive.org, you can look at old Vanguard return projections that you can see. Even back then, they're low, even after the market crash of 2007, 8, 9. Because they still, as most people did who follow the CAPE ratio, said the stock earnings were way higher than historical. CAPE is a cyclically adjusted price-to-earnings ratio that Robert Shiller, the Nobel Prize in economics one, kind of coined probably back in the early aughts, maybe even before, probably the early aughts or so. And as such, we look and say, oh my goodness, the CAPE ratio is way high in 1929. The CAPE ratio is way high in 1999, and the stocks fell. Thus, high CAPE ratio, stocks fall. The problem is that we've had a high CAPE ratio for literally 15 years now, going back to 2010. I've talked about this a million times. And if you would have followed the CAPE ratio silliness, you would have been out of the biggest boom market we've had in a long time, if not ever. It's just sad. Anyway, so and Jeremy Siegel has talked about the deficiencies of the CAPE ratio, and he and what's his name, Shiller, kind of go back and forth. And Shiller even adjusted, modified the CAPE ratio, because Siegel says, look, man, one of the reasons the CAPE ratio was off is because the bond rates were so low. If you're going to use a historical PE ratio, but to not compare it to historical bond rates, you have to look at alternative investments. What can I get my opportunity cost by investing in a 10-year treasury? Investing in stocks instead of a 10-year treasury is a yield on the 10-year treasury. If the 10-year treasury is yielding 2%, that's not much of a opportunity cost now, is it? So I'll go ahead and take and add to my stocks, even though stocks are trading highly relative to CAPE ratios. All right. Now the opportunity cost on 10-year treasury is now 4.25. Historically, I think I want to say 5.5. I think 10-year treasury 5.5. Don't quote me on that, but I think it is. Historically, 10-year treasury yields are 5.5. Something like that. So you're like, okay, so we're not even at the historical average for the 10-year treasury. We're still well below it. So if we're still well below the historical average of the 10-year treasury, inherently, then the stock PE ratio would be higher, which, again, the cyclically adjusts. So it's basically leveling out the last 10 years. But one thing people forget all the time is the number of stocks available. Don't people remember the supply and demand drives prices on anything, man. Supply and demand drives prices. I got this little, I guess my wife's got this little nail filer thing. If the supply of nail filers goes down and the demand increases, what happens to the price of nail filers? It goes up, man. Even if it's trading significantly higher than what it did before, the price goes up. Why? Because there's more people wanting to buy it and there's less supply available. So what happens to the number of stocks outstanding? I was reading an article yesterday. We talked about this before on the show, on the YouTube channel, but the number of publicly traded stocks is like half of what it was just 20 years ago or something like that, or 10 years ago, something like that. And fewer are going public anymore. The number of IPOs is way, way, way down. More and more companies are going private. Why? Because they're getting private capital. And when you go public, you have more SEC regulations and whatnot. All right. So a lot of companies want to stay private so they don't have to subject themselves to the SEC rules and regulations that they got to file, the 10Qs, the 10Ks, the freaking whatever the hell the things are. I don't know. I'm in line. It's the first day of school, by the way, and I got to go see my doctor. Probably should have had an appointment this early. It just occurred to me with first day of school because I'm way behind the curve here. We'll see if I can get in there on time. I knew I should have left earlier. My wife said, you can leave. You'll be fine. So stuck in traffic. First day of school. Is this the last first day of school ever for your buddy Josh? The last first day of school ever. Started in 2005 back in Dayton, Virginia, and ending in 2025 in Milton, Georgia. Last first day of school. Isn't that crazy with 4 kids? Kind of a sweet, what's the word? Sweet? No, whatever that word is. Where you're like happy but sad at the same time. You guys tell me in the show notes. All right, but if we have less and less stocks going public and more stocks going private, inherently that decreases the supply of stocks available. That's just all there is to it, man. It's just all there is to it. Supply goes down. What's happening to demand? Demand is still going up. People want stocks. People are buying stocks left and right in 401k plans and all this. Now, you can make a case, which I've heard many times, that the baby boomers are going to be net stock sellers. I have yet to see any evidence of that, frankly. I just don't see it in terms of they're buying, they're selling more stocks than they're purchasing. I'd love to see it. I mean, I'm not going to claim ignorance here, but I haven't dived into the whole thing in terms of the last quarter or something like that. But I've yet to see any evidence that said baby boomers are net stock sellers, which we've heard for years, that baby boomers are going to be selling stocks and that's going to have a decline on the market because that will reduce the demand and increase the supply of shares available. But it doesn't matter if the number of stocks trading out there are being reduced every single year. Companies are going private, less companies are going public. And as such, I mean, companies being taken, private equity is taken over. There's no two ways around that. And you can't blame them. This is the thing with high regulatory environment. It encourages company owners to say, I don't want to be involved in the SEC. I don't want them freaking breathing down my neck. And as such, I'm going to go private, and investors, accredited investors, those are people who have a certain amount of net worth and some, I don't want to say skill, but some knowledge of how the markets work. They'll have to take the risk because they're not going to be bailed out by regulatory action by the SEC. And you can't blame people. I'm telling you, man, the compliance of following SEC rules and regulations is through the roof. That's a big cost to earnings, big hit to earnings. So, and then you have to deal with day-to-day, I do trust me. When I used to do seminars, I'll never forget when I used to do seminars. This one guy, oh my goodness. The guy was upset like crazy that Vanguard, USA increased their, they didn't increase, I can't remember. We had what was our fee on our S&P 500 index? It was like 1/8% every quarter or something like that. I forgot what it was. And he was mad. Oh, look, hi, puppy. Puppy, pop. Hey, puppy. Oh, hi, buddy. You're so handsome. He was mad that we didn't do something in the prospectus that say it was that we're paying it on a quarterly basis as opposed to annual basis or something. He was mad. Ruff. Hi, puppy. Oh, you're so cute. You're so cute. See you later. And he was mad. I said, dude, this is really... because I want you to go back and tell headquarters to change the prospectus, blah, blah, blah. And I said, okay, I'll do that, sir. And I couldn't believe it. He actually called me like 3 days later and said, did you do it? I've been a USA member for blah, blah, blah. I was like... It's like, sure, I did. He goes, well, I want to talk to the portfolio manager. I said, dude, that's not going to happen, man. Come on. All these girls, and they're looking with their fake tans, ready for first day of ski. Oh, boy. There goes my son's school right there. You can't really see it. We've had 4 kids. This will be 4th kids graduate from Cambridge High School in Milton, Georgia. Can y'all see that? Milton High School has been good to us. All right. God bless. Anyway, so hold on just a second. Oh, man. Kind of sad. Your old buddy Josh, last kid going to ski, first day of ski. Had no way I'm going to make my appointment on time. Oh, well. I can get my physical done, blood work, get my freaking fingers shoved up my butt. That's why I go to these exams, to get my fingers shoved up my butt. Get a woman in my doc, a primary care physicians, a woman too. So, yeah, hey, can we do a prostate exam? She goes, Josh, we just did it 2 weeks ago. I want another one, doc. Anyway, so don't worry about these negative Nellies. It's silly. And it's funny how they always say the CAPE ratio. They've been saying this for years, decades, and I get so tired of it. All right, God bless. We'll see you.